All right, let's get right into it. Today we're doing a full deep dive into this absolute roller coaster ride we've seen in global oil prices in 2025, and right at the center of a lot of this market chaos, some surprising, pretty aggressive new moves from OPEC plus FOM.
Yeah, we've basically pulled together insights from, well, quite a stack of articles, research papers, market analyses to really try and grasp these, frankly, monumental decisions OPEC Plus has made recently and how those ripples are, reshaping the whole global energy picture.
Okay, so our mission here is to cut through that complexity for you, give you the essential nuggets, not just what's happening, but crucially, why these shifts really matter to you. So here's where it gets really interesting, I thought. Forget price stability for a second. The thing that really jumped out from the research was this radical pivot by OPEC Plus in 2025. It feels like they're not just managing the market anymore. They're aggressively fighting for market share. That's a big shift, isn't it?
It really is. And, what's insightful isn't just restoring production cuts. It's like OPEC Plus basically declared open season on market share. They sped up the unwinding of those cuts, bringing back, maybe 2.5 million barrels per day, way ahead of schedule.
2.5 million barrels.
Yeah, it's like a high-stakes poker game. They seem willing to flood the market, almost betting that grabbing volume now beats keeping prices high long term.
Okay, so for you, the listener, the global consumer, what was the immediate, gut punch impact of all this extra oil suddenly hitting the scene?
Well, it wasn't subtle. We saw Brent crude just plummet. Imagine oil prices dropping, 4 or 5% in a single day, just on the news of more supply coming.
Right.
Brent was above $70, right? It dropped sharply into the mid-$60. At points during these supply surges, it even touched $58 a barrel.
58.
Yeah. And some analysts are now actually warning, look, if this oversupply keeps up, if we hit maybe a 2 million barrel per day surplus, prices could genuinely fall below $58 later in 2025. It really highlights this deep psychological shift, the idea of scarcity. OPEC Plus themselves are kind of challenging that, even if it hurts them short term.
But let's zoom out from OPEC Plus for a moment. What's the wider context, the broader landscape for oil and gas in 2025? Are these market share fights happening in a vacuum?
No, definitely not. If we connect this to the bigger picture, sure, prices were often bouncing between $70, $80, but the global market is actually seeing demand growth slow down considerably.
Slowing down, why?
Well, it's largely down to, the rise of renewables, stronger energy efficiency policies kicking in around the world. The really big picture is forecasts now suggesting oil demand might actually peak sometime in the 2030s.
Huh. That seems counterintuitive then. Why flood the market with oil if global demand is already softening? Is this a desperate move by OPEC Plus or is there some kind of shrewd long-term calculation we're missing?
That is the absolute core tension, isn't it? Even with, say, strong offshore investment, continued demand from places like Asia Pacific.
Right.
Global oversupply is still kind of expected in 2025.
Right.
And part of that is also about, productivity, especially out of the U.S., the International Energy Agency, the IEA. They see this broader trend towards cheaper energy globally as renewables accelerate, which could leave these persistent surpluses in oil and gas. So yes, you could say OPEC Plus is fighting harder for position in a pool that might be gradually shrinking.
Okay, so given this really high-stakes strategy, what would it actually take for OPEC Plus to hit the brakes, reverse course? What are the critical signals, the tripwires they must be watching?
That's a really important question, and they have said explicitly, actually, that these hikes depend on evolving market conditions. So they're definitely monitoring several key things.
Like what, for instance?
Well, a sharp, sustained rise in global oil inventories. That's a big one, especially in the U.S. or other OECD countries. That's a major warning sign. Also, if another hike triggers a really rapid, sustained price drop, particularly below the fiscal break-even points for key members.
The point where it really starts hurting their national budgets.
Exactly. They'd absolutely have to reconsider that. Also, weaker demand growth signals, maybe lower consumption forecasts or disappointing data after the summer driving season, that kind of thing. Plus, any big geopolitical shocks, macroeconomic downturns. Those obviously play a role. And internally, they'd watch for signs of strain among members, or if non-OPEC Plus producers like U.S. shale start grabbing market share too quickly because of the lower prices.
It really is like watching a high-stakes chess match, but the board itself feels like it's slowly dissolving underneath the players. You have OPEC Plus making these aggressive moves, pushing prices down, but is it just delaying the inevitable decline, or is there some kind of genius long game we're just not seeing yet?
Yeah.
It's such a complex dance.
It really is. It's a testament to just how huge these shifts are right now.
So as you reflect on this deep dive, maybe consider this. With this accelerating trend towards cheaper, cleaner energy and slowing oil demand, how can OPEC plus Ruckus's current focus on market share keep evolving, especially in a world that might need less and less oil in the coming decades? What does their ultimate adaptation look like, beyond just this fight for share, and something to perhaps mull over until our next deep dive?